Elon really got himself into another sticky situation. But then again, that's what he does best, right? Get into these situations and then we get to watch him get out with great memes along the way. That's what we love about him. That's why we stay glued to whatever he's doing. And in this new difficulty, it's Elon's own personal finances that might come back to screw him over. He's worth $39 billion, but at the same time, he's poor. So of course you gotta ask yourself, how does that even happen? But in fact, it actually happens to a lot of rich people. So we're gonna talk about that in this video and also how you can avoid that same mistake that so many of these wealthy people make. And before we jump in, of course, the explosive stocks checklist teaches you how to find the same stocks that our team looks for that move higher really fast, especially in this type of market. It's a free checklist. There's a link down below in the description and comments, even a link up above in this video. Click that, check it out, all free. So the Wall Street Journal just came out with an article talking about Elon Musk, tech's cash poor billionaire. As you can see right here, this dude is selling all his houses, all his possessions. And we talked about this a little bit in the last video. He's currently on the cusp of a stock option grant that promises to make him almost $1 billion richer, at least on paper. If you guys remember, he doesn't get any salary at Tesla or any bonuses. All his compensation is tied to stock options. And in order to get those options, the stock price has to meet certain criteria. So recently, Elon became eligible for the first of 12 tranches of the stock options that he's offered as the CEO of Tesla. And one of the stipulations was that the market value of Tesla remain above 100 billion for a specified amount of time. And if that happened, he would get the option to buy 1.69 million shares, which would be worth more than 1 billion because he's buying them at a cheaper price. So the shares themselves cost 592 million to buy because he's buying at a lower price, but their actual worth right now is over $1 billion. So you make a nice big profit right away. But the problem is with all these options and everything is that it's all paper money. It's all tied up in the stock market. It's the same concept where I always talk about why you should take profits, because if you are, say, invested in Tesla and you're seeing the stock shoot higher and higher, you might think that you want to hold on for the entire ride because you're making more and more money. But in fact, that money isn't actually yours until you sell those shares, which is why I've shown this example of Tesla so many times, but it's why we have targets. So as Tesla is taking off, we keep selling shares so we could actually lock in that profit, because the cash isn't actually cash unless it's in your pocket. And you can see with this busy annotated chart, we're taking profits all the time. So it's the same concept. You could have a lot of money on paper, but it's not actually your money until it's in your pocket with cash. And in Elon's case, he's been cash poor for a long time. He seems to always be cash poor, even as a billionaire. So even before Tesla went public many years ago, Musk was in a real rough divorce with his first wife, and he had to tell the judge that he ran out of cash. And he was actually on emergency loans from friends and family to pay his living expenses, because his wife wanted money. And he's like, I don't actually have any money. He said that his net worth was largely tied up in Tesla, SpaceX, and Solar City. I have no other investments that I could easily sell in order to generate money. My cash position is very limited. About 4 months ago, I ran out of cash entirely. This same thing came up in court again when Elon was back in court about the whole comments that he made about the man involved in the rescue of the Thai soccer team from the flooded cave in 2018, if you guys remember that. The lawyer in the case said in a filing that Mr. Musk had described himself as financially illiquid, so he can't pay any people trying to sue him. So if Elon doesn't have any cash, then how is he paying for his billionaire lifestyle? Well, the way he's paying for it is by borrowing money. The guy is nuts. And the way he's borrowing money is by putting up his Tesla shares as collateral. So instead of selling those shares and collecting money, he's just borrowing on the fact that he has those shares. And you can see right here in this chart, it shows how many of his shares he's pledged as collateral versus the rest of his position. The pledged shares for the loans are the red part. And every year since 2010, it continues to go up. Share count keeps rising too, but you can clearly tell that the percentage used for collateral is rising faster. Right here by 2019, it looks like almost half. And actually, it looks like Musk has pledged 54% of his Tesla shares, worth about 15 billion, as collateral on loans. So that rose from 40% from a year earlier. And his total loans outstanding are 548 million. That's how much he's borrowed. So Elon is super leveraged in his own personal finances. And the fact that so much is pledged as collateral for these loans is a big risk to people invested in Tesla. Because if the price of these shares fall far enough, banks can call on Elon to repay those loans. He'd have to sell off those shares. And if he has to sell all those shares, and it's a lot of shares, Tesla's stock price can absolutely crash. Tesla even warned their investors of this in their regulatory filings. They said if the price of our common stock were to decline substantially and Mr. Musk were unable to avoid a sale of the pledged shares, for example, either by contributing additional collateral from someplace else, not those shares, or reducing his leverage, then Musk might be forced by one or more of the banking institutions to sell shares of Tesla common stock under the terms of his loans. And any such such sales could cause the price of our common stock to decline. And it's a big risk because of how many shares he does own. So it's a risk to the share price, but it's also a huge risk to the company itself, because Elon needs a certain amount of shares of the company to be able to control it, because it is a public company, so there's always a risk of him getting kicked out as a CEO. And that seems to be the main reason why he never sells his Tesla shares. He's only willing to borrow on them, because as it says here, selling his shares would weaken his control over Tesla. Unlike at Facebook and Google, Tesla doesn't have that dual class of stock ownership that basically gives certain people super voting power over common shareholders. That structure wasn't common in 2010. So at Facebook and Google, Zuckerberg and then Sergey and Larry, their structure is super smart because they own all the shares that actually matter. No one can kick them out because they have all the voting power. How that even works is a whole different video, but it's an amazing structure to have full control of your company even when it's public. But unfortunately, Elon doesn't have that. So instead he has to rely on the Tesla rules that require a supermajority vote for any major corporate changes. And with his 20% stake, he can effectively veto any takeover attempt or other unwanted measures. So that stake, his number of shares, is very key so he can keep doing what he wants. Now, one way to fix being cash poor is start reducing your lifestyle, which it seems like that's exactly what Elon is doing. Because if you don't spend as much, then you don't have to borrow as much. So if you remember in the last video, we were talking about Elon's tweets, how he decided to sell almost all his physical possessions. He's not going to own a house. And since that tweet, he listed 3 of his California mansions for sale with asking prices totaling $75 million. And then he also told the Wall Street Journal that he was going to unload 4 other houses in Los Angeles. So that's insane. He had a total of 7 houses. And he said once they're sold, he doesn't know where he's going to stay yet, but he's probably going to rent a small house somewhere. 7 houses is absolutely ridiculous. Is he overcompensating? Maybe. Because this is the same guy who almost lost everything in 2008, didn't have any money, was sleeping on friends' couches, and he was technically a billionaire back then too. So as soon as he got some money, did he decide he wanted to make up for all that time he didn't have a house, so he bought 7? That's ridiculous. There's no need to take on that much leverage, especially when this guy is barely at home. A lot of times he just sleeps at work. So selling all his physical possessions and downsizing is probably the right move. But of course, he doesn't say it's because he's poor. He just says that he's trying to make his life as simple as possible right now, so he'll only keep things with sentimental value. He doesn't need the cash, he's just devoting himself to Mars and Earth. Possessions just weigh you down. However he wants to justify it, I think it's a good move. Because if Elon loses control of Tesla, if he has to sell those shares, then Tesla is done for. Because they could replace him as CEO, and then if you don't have Elon running the company, it's not going to be able to do what it set out to do. This is one of those companies that is very, very dependent on one guy, Elon. And there are many examples where boards thought, no, we don't need that main guy. The company can survive without him. They get rid of him. It's a big, messy process because the head guy is usually a founder, and then the company is just never the same. Remember what happened with Steve Jobs at Apple? He was forced out, and the company only became what it is today when he came back. So it's the same situation here. That company is very dependent on the key man, regardless of if anyone wants to admit it, but in this case, it's very clear. Because obviously, if you're an investor and you're investing in Tesla, then you're investing in Elon. And apart from selling all of his possessions, Elon is doing more crazy stuff. He's restarting production against Alameda County rules. He's going to be on the line with everybody else. If anyone is arrested, I ask that it only be me. So he's decided to restart Tesla's production and break some laws. But supposedly Tesla was told they could operate by the state of California, but their county illegally overrode that decision. And Elon said, yeah, California approved, but an unelected county official illegally overrode it. Also, all the other auto companies in the US are approved to resume. Only Tesla has been singled out. It's super messed up. So Elon, because he's Elon, is taking matters into his own hands. But he has support from the #1 man in our country, Donald Trump. California should let Tesla and Elon Musk open the plant now. It can be done fast and safely. You gotta love Trump's tweets, right? Going against the states. That's the beauty of the United States, that there's such a strong emphasis on states' rights. But it's also sometimes a downfall, because in the case of a pandemic like the one we're in right now, we would have done better with a more centrally coordinated response, instead of piecemeal decisions by various states. But it is what it is. And is Elon being influenced to open his plants against the law because he is cash poor and needs the company to keep making money? Maybe. He needs that stock price to continue staying up, right? And who knows, by the time this video is published, maybe Elon will be in jail. Won't that be interesting? Just add it to his legendary list of feats. But it's funny because this whole cash poor thing that I'm talking about, it's not just Elon that gets into a situation like this. A lot of rich people do the same thing. Take a New York rich person working on Wall Street, for example. Sure, they're making a huge salary with a ton of money each year and bonuses and all that, but they also live in New York, which is super expensive. They might have a house in the Hamptons, which is super expensive as well. All their kids go to the best private schools, and then they got to keep up with the rest of their social circle in New York buying all this random stuff. So at the end of the day, all their cash is accounted for. They don't have much wiggle room. And we actually talked about this in billions because they had an example of one of these hedge fund managers that got himself into that situation. That one Indian guy who was the hedge fund manager who ends up having to work for Axe. Axe took advantage of the fact that he was cash poor to make him do all the illegal stuff that he wanted, which is why you don't want to be cash poor, because you're going to get yourself into tough situations and then you're going to have to do things that you might not want to do. It's definitely something that you need to watch when you're investing in a business, because if the owner of the business or the main operator is cash poor, his incentives might not be aligned with the company, because instead of doing what's best for the company, he might want to do what's best for himself. And it's not necessarily that he's a bad person or something. It's just that a person's situation is going to dictate what decisions they make. I didn't realize, but this is actually an issue that happens in businesses of all sizes. So for example, if you have a partnership in a business and there's a group of co-founders, what you don't realize when you're starting out is how important it is to know each founder's financial background. It's awkward and uncomfortable digging into another guy's personal finances, that's private stuff, but you'd be surprised at how much it affects the business. Because if things are not good for a particular person, when you make a business decision, you're not just making it for the business, you're making it for that particular person too, which is not a bad thing, but can turn into a bad thing. So I've seen multiple partnerships of people who started a company and then all of a sudden one guy is out spending a ton of cash. They're locked in with their third house, they got a boat, they got all this stuff. So when the company wants to expand or lower salaries a little bit or have some wiggle room, they can't, because that one guy needs that money coming in because it's all accounted for. And that causes a lot of problems and it hurts the business. So in Elon's case, I think he's doing the right thing, cutting down, as I said before. And in yours, in my case, the good rule of thumb to follow is to keep your fixed costs as low as possible. You got to make sure that your personal finances are robust, that if you take a significant hit in your salary, you're not going to be completely screwed. That's how you stay safe long term. So in my case, I'm fine to increase my variable costs, things that I could cut right away if something goes south. But fixed costs, I'm really careful. So if I'm locked in and got to pay this money to the bank or whoever, regardless of what's happening, that leaves you open for potential danger in the future if something does happen. Now, of course, you can't avoid all fixed costs, but you just got to be reasonable about it. And remember that things aren't always good. Protect your downside. Same concept as protecting your risk in the market. And our investors at Fallible are geniuses. We know how to protect that downside. Like Thomas here. He usually buys at the top, holds as the stock goes down, then sells right before it shoots to all-time highs. Then he repeats that over and over again. It's a genius strategy of buying when others are greedy and then selling when others are fearful. That's how you secure your financial future. Thank you for this incredible advice, Thomas. And if you need advice for what to do with Tesla, well, our Fallible community has some answers for that too. Jinjin said if Elon gets arrested smoking crack, that's the final straw. I sell at that point. Until then though, he's holding on, which is perfect. And that's what you need. You need a stop loss at a certain point where you're going to say you're going to get out. And it could even be a fundamental stop loss, like if Elon is smoking crack. You just need to pick that point and stick to it. Ron P also has a fundamental stop loss. He said, yeah, if he gets arrested for smoking crack while in Bangkok making a sex vid with a 6-inch ladyboy. That is Ron P's uncle point. I always appreciate the Fallible family sharing their financial wisdom, helping investors everywhere. That's what we do. And if you'd like more help on how to pick the best stocks in the market, then get this explosive stocks checklist. Link in this video and down below in the description and comments. It's free, you could download it. Feel free to comment down below with what you think about all this, and of course post more of your financial wisdom. I love it. Everyone loves it. And don't forget to subscribe so you can see our new videos coming out all the time. Do that and I'll see you in the next video. Stay fallible out there. Bye.